Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, May 18th, 2016. It's about 11:40 Eastern Time right now as I'm starting this video, and what I'd like to do is take a look at crude oil and the energy sector, including XOP, which is one of the active trade ideas on the site right now, and I'll touch on XLE as well and a few of the top components in the energy sector. Starting out, we're looking at a chart of West Texas Intermediate crude oil prices. This is a spot end of day chart, so it's not reflected right now. I'll look at the futures here in a minute, as well as USO. But I posted this one yesterday on the site. Essentially, what we have here is a bearish rising wedge pattern, which prices recently broke down from. You can just make out right here, hit this support zone, bounced up, and we're currently back testing, making a high level back test of that wedge right around the apex. So my expectation is for a pullback at least to that support zone, and I put up some targets on the site there yesterday. For what levels? That bearish rising wedge is confirmed via negative divergences, which I like to see. Although the MACD is pointing up right now, so to confirm those divergences, I'd like to see a bearish crossover here on the MACD. And the MACD roll back over before these divergences are taken out. So you can take a look at the chart. You know, the bullish divergences in place preceded these major rallies that we've had in crude. Just as bearish divergences, especially here on the daily time frame, often precede corrections. Now, I'll just pan up here a little bit on the chart. I had the dates cut off. So this chart you can see goes back about 2 years. All right, let's move on and take a quick look at futures here. And let's see what I can pull up for you. Okay, this is CL. Yesterday I posted a chart of the June contracts. This is the July contracts. The chart will look almost identical except the price levels. Since this is an extra month out, those futures are reflected at higher prices for the time premium in there. So you can see 47.57 is really the first pullback target on the July contracts of CL, and 48.84 roughly would be the second pullback target. Now, what's happened since I posted yesterday? We did break down below the bearish rising wedge pattern, as you can see, and as was shown on that chart yesterday. The bearish rising wedge pattern was confirmed on with the divergence on the RSI and MACD. By the way, this is a 1 hour period or a 60-minute period chart. And right now you can see prices are just starting to punch up through there. We're back testing the wedge. And really all that matters here is a 60, maybe even a 120-minute close. So crude does have the potential to power up and foil this wedge breakdown, but as of now, I still favor downside. Like I said, the divergences in place are there. The wedge is really at the point where most wedges break down if they're going to do so. So we had the breakdown, and I'm still looking at this as a back test. But again, let's see what happens. Let's see how the day closes. So that's a look at crude, and we can look at it through USO. And there's another ETF too. I like USO because of liquidity. USO has crude oil as well as heating oil and other crude derivatives and other crude products, where oil is more of a pure play. And you can see the similar type patterns. You can see these rising wedge patterns. There's oil. Here's the USO daily chart. And if we really zoom in, we can see this is the rising wedge pattern that I was pointing out on crude right here. These lines, you can see the breakdown and the back test. Price is really coming in right around the apex of that wedge now. We had divergence, but it still is yet to be confirmed because the MACD is heading higher. So again, crude, to keep this pullback scenario alive, needs to pull back soon. USO is, sometimes it's a case of the tail wagging a dog with a lot of these ETFs like GLD, for example. There's so much money in GLD that I have no doubt that inflows and outflows of the ETFs can influence the price of the underlying commodities. So that's why I often track and follow USO. When trading crude oil as well as the futures and spot prices. But you can see this big gap back here. That was back in December, it looks like. December, yeah, right around the New Year's gap. Or right after, no, I'm sorry, that was in the beginning of December, my bad. So there you can see that line. I have a line at the top of the gap. I should probably add one here. We'll zoom in a little bit so you see what I'm doing. Put a line at the bottom of the gap, and that's where we're at right now. So we're at resistance while really squeezing right about in the point of right about into the apex of this wedge, and it was a little more clear. It looks a little bit above here, but again, you're going to have some tracking error, and this is not exactly a pure play. It's close enough, but as any commodity tracking ETF works, they're not going to do a perfect job of tracking the underlying commodity. So just something to watch. And again, my case is a nice healthy run at resistance with bearish technicals in place. I still favor a pullback in crude in the coming days or weeks here. All right, let's dig into what we're trading. XOP is an official trade idea on the site. We already hit the first target. The targets were based off the 60-minute chart and off this pattern here. So I can't recall right now exactly where we shorted, but we had a pretty good run. We hit that first target almost perfectly, the 32.30 level. Bounced off the first target as expected. As I often state, that's why I have multiple price targets. Each level is where I'd expect a reaction. And we had the reaction, we bounced, and we came close to back testing, but we never back tested this uptrend line on the 60-minute chart. So again, it all hinges on crude. If crude rolls over, then almost certainly the energy sector, as well as XOP, which is just a subsector of the energy sector. That's the SPDR S&P Oil and Gas Exploration and Production ETF. And so I'm still looking for, again, if a crude rolls over as I expect, at least a pullback. I've remained longer-term bullish on crude throughout the year and still am. But just looking to trade a pullback here. It also meshes with my views on the dollar. Dollar has been rising. So far I've been right on that call, and it did cause somewhat of a pullback in crude. We're still and the energy stocks as well. We're still off the highs, but again, ideally that's what I'd like to see, another thrust down to this next target level, 31.77. And if things get really ugly, there's still the possibility of a move down as far down as this 28.60 level in XOP. Daily chart on XOP, you can see the rising wedge pattern, breakdown, near backtest. There's horizontal resistance here. Call that 35.60. It says 35.59 there. Just call it 35.60 to be safe. And you can see how that's pretty well defined going back in 2015, late 2015. So maybe we so far we almost went to that level once, failed there. We've reversed a little shy of it. We're trying to make a run at it again. Potential bullish crossover there. So, this one may not work out. We hit the first target. So the trade in that sense has been successful. If anybody booked partial profits there, tighten stops, but I'm still holding out. I have, like I mentioned, I shorted Gush, and all this back and forth slop is working for me. Obviously, I don't want to see prices go against my position on any given day, but if we trade sideways for a while and then roll over, that decay suffered by the 3-time long Gush ETF. Gush tracks the same sector as XOP. It's just the leverage XOP that works in my favor. So that's XOP. And as I like to do, let's just take a look at a few of the top holdings. XOP is fairly well balanced for an ETF. Some aren't. I'll get to XLE here in a second, and then we'll wrap the video up. This is the top holding. On another screen, I'm looking at the top holdings of the XOP. The S&P Oil and Gas Exploration and Production sector. This is SM Energy Corp, and you can see a nice clean downtrend line off the highs where we recently failed at. We had an uptrend line off the lows, which was just as well defined, even more reactions there, and we broke down. Now, some might say, well, we look like we're flagging, and we could be, but from my experience, this was a bull flag. Pretty nice symmetry on the pattern. We went up here, we flagged, we broke out. It's possible. Rarely do you see consecutive bull flags and then another move up. In other words, you take the flagpole, which would be the move from the bottom of this. This was the original flagpole, the move up to the flag. So if this is a flag right here, I don't have it drawn out that way, but I'd like to, I'm covering all the options here, and I keep all the options open. If crude just somehow powers up through these divergences, this is a possibility, not one that I'm favoring right now, but that would be your flag. And so your flagpole would be this point from the bottom of the last flag up to there. But again, consecutive flags like that and to play out to the maximum extent or the measured move, very rare, and I don't think that's going to happen. So I'm looking for a pullback to any of these levels here on SM. And again, I'm just trying to make the case that that components of XOP confirm the fact that we are at pretty significant resistance levels while coming off extreme overbought readings. You look down here on the RSI, you can see that the RSI went up to almost 80. Let's just take a look. The last couple times we came even that close was right here, followed by this huge drop, and way back here, followed by this huge drop. So going long on the heels of these overbought readings, and just as happened back here and the other time, you see the drops don't come immediately, but you topped out. You pretty much went sideways for a few weeks, even a couple months, and then fell. So my point is, to summarize what I'm trying to say here, the upside at this point is minimal. And another way to spin that, I see the RR to shorting, being short here, is favorable, the risk to reward ratio. To quantify that, put it in another term, the odds of the next 10% move to the upside are far outshadowed by the next 10% move being to the downside. That's what I mean by risk reward. So going long, maybe you're probably just going to tread around sideways for a while these overbought conditions are worked off. Maybe crude power's on higher, but I don't see a straight shot up to this next target I have here on WXP, which is all the way up around 14. There's a near-term trend line to watch, and so far we've had a failure here twice at this resistance level, this orange line, which, as you can see, was very well defined going back in late 2014, early 2015. And I won't go through them all. The first one, the SM, was a 3.17% weighting. WXP was 2.79, and then here is Southwestern Energy Company, SWN, and you can see there's a pretty decent resistance level, reaction high. There was a downtrend line that was taken out. This is a level to watch, this uptrend line here. Again, to use the glass half full scenario here, we could look at this and say we see a potential bull flag pattern. So that's a possibility, and that's why we use stops, because if wrong, I'm still holding out for more on that gush trade, but if wrong, least I'm going to do is break even, or probably, stop out for a small profit on it. So there's your potential flag, but we have resistance still not too far overhead, and if this trend line breaks, this uptrend line off the lows breaks, this would be my target on that stock would be $10. So those were the top three holdings in XOP. Let's just look at the more popularly traded XLE. This is a Spiders Select Energy Sector ETF. You can see a pretty clean bearish rising wedge pattern right here. Prices have been flirting with the bottom of that pattern, that trend line, the trend line off the lows for a while. We had a few intraday breaks, but we haven't had a solid or definitive break of that yet. And I say yet, it appears to me that it's coming, and I'll validate that or confirm my analysis here in a second with the top holdings at XLE, which is a lot more top heavy. So I put a lot of weight into I call them the 800-pound gorillas of the sector. The ExxonMobil and Chevron Texaco really make up the bulk of this, the XLE. So here's XLE. Watch for a break of that trend line, which would most likely bring us back at least to this level here, around 63.90, a little above, and quite possibly all the way to the back test of this primary downtrend line, this yellow downtrend line, I should say. And that would take us down. I didn't draw that out perfectly, but you can see what I'm looking at. The yellow downtrend line, would bring us here for a back test. And really nice entry would be all the way back here. If that back test, and I could easily see this and set up, but just looking at it here, it looks possible a big inverse head and shoulders pattern, with this being the left shoulder here, the head, and we could put in a left shoulder that comes down, puts some decent symmetry on the pattern, hits anywhere in this support zone here, these two horizontal white lines that I have, as well as that downtrend line. So back test there, and then finalize a right shoulder of an inverse head and shoulders pattern, and you'd have a downward sloping neckline if that's the case, and that would be your breakout, and that would be very bullish longer term for the energy sector. So, I still remain longer term bullish, but right now, we were long a lot of those stocks recently, so we definitely capitalized on the move in the last few months. But at this point, I think the upside is limited. And let's just wrap it up with looking at the big dogs, if we will. The biggest of the big dogs is ExxonMobil, XOM. And here's the stock. You can see here's that previous major reaction high back in, looks like May. Yeah, so about a year ago, May of 2015. We have some gaps and quite a few candlesticks if you just kind of eye the reactions here. So I think that's a significant level. It's just above 90, and we're there now. Let's color it to really set it apart. So you have ExxonMobil at resistance. Not drawn out here yet, but I'll show you, big negative divergence on that. And as well, we already have it down here on the RSI. ExxonMobil, by the way, is, and this is according to Spiders, State Street Global Advisors, they run Spiders ETFs. ExxonMobil is a 19.08, so 19% weighting. 1/5 of the XLE is solely attributed to what ExxonMobil does. Then right on the heels of that is Chevron Texaco, or Chevron Corporation, at 14.73. So call it 15%. 19 and 15% for the two biggest names in there. And then you go down the line, Schlumberger is at 8.25, and then it gets much smaller from there. So ExxonMobil, it's like I said, pretty bearish chart, big, long-standing divergences, the MACD rolling over. We had this minor uptrend line break. If you zoom in here, that yellow uptrend line you can see here, we broke down and we back tested it, and we're still failing at that resistance level. The next sell signal on ExxonMobil will be a break of this primary uptrend line, and although I haven't listed any targets here, I'm more interested. I have personally, I'm short the was it ERX? ERX is a 3-time long energy sector, so it's like XLE but with 3-time leverage. And I'll sit patiently as long as we don't blast off with crude and like I say, I take everything into my analysis. I don't just solely focus on the charts of XLE if I'm trading XLE or ERY or ERX. I'll look at ExxonMobil, Chevron Texaco, because they are the big companies, maybe Schlumberger, a couple others, and along with the charts of XLE. And that's what I'm seeing here is stocks at resistance while extremely overbought. You don't see ExxonMobil very often become this overbought. We can just take a look back here. We see it crossing the 70 level. You can see what happened from that point. And we have to go all the way back to June of 2014, 2 years ago. At that point was the last time we hit that 70 level on the RSI, and you can see what happened. So there it is. The case, I think, is pretty strong that the nothing is 100% in technical analysis, but I think the case is pretty strong that the risk reward is skewed to the downside right now, not the upside on these. All right, I'll wrap it up with Chevron. There's Chevron, same thing, large standing negative divergences in place. If you don't see what I'm referring to, I'm talking this reaction high versus the current highs. So price is making a higher high against the PPO, which I have on this case. MACD is going to look very similar. There's the, put it down here at the bottom. There's the MACD, also confirming the negative divergence, as will the PPO, which is a closely related indicator. Let's just get this one out of the way. And just like ExxonMobil, you can draw an uptrend line off the lows in January. Quite a few reactions. I have two very varying trend lines, or alternative trend lines, I should say. There's the yellow one, which I'll tighten that up a little bit to get a little more accurate. Catches these lows, catches quite a few reactions. We broke down from there, and we're just now cracking under, although it's not impulsive yet, because what happens is this trend line off the January lows comes in right now where this horizontal support level. Look at the last few weeks. Look at all these candlestick, the bodies and or shadows tagging on this level right here, which is 100, 133 or so. And that's pretty nice support. Below that, we also have support. We have this reaction high back here, and that's where this one candlestick shadow or tail, whatever you want to call it, a shadow tail, hammered. That's about 99. So what I would wait for here, if you're looking to short individual names, you could get a little ahead of yourself, or a little jump the gun and maybe short it on a break below that. I'll call it, say, 125 to be safe. But the sure thing would be a break below this 90, 98, 93 level. That would definitely have taken us below this uptrend line. And as far as targets, I could see, if this thing gets a pretty healthy correction, I could easily see us coming back to this level here, this support zone. You can see the lines between running from about 92 to 93.25. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.